Anna Nichols, Director of Communications at Altair Advisors, and I'm joined today by Jason Lord, our Chief Investment Officer. Welcome, Jason.
Thanks, Anna. Glad to be here.
The markets had a terrible fourth quarter. Was that based on realistic concerns about the market slowing down, or was it an overreaction?
Well, Anna, we believe it was mostly an overreaction to the negative headlines. The global and U.S. economies are, in fact, slowing. But slower growth does not mean no growth. And more importantly, it doesn't mean recession. Both the domestic and world economies continue to expand. In fact, one of the benefits of the market shakeup was that it created some opportunities for investors. In particular, both U.S. small cap stocks and emerging market stocks are a couple of areas that now have more attractive valuations. And where appropriate, we plan to be adding to these categories.
A big concern coming into this year was the Federal Reserve's continued interest rate hikes and whether they might jeopardize economic expansion. Has that changed?
Yes, it has changed, and mostly for the better for investors. The Fed raised rates 4 times last year, and that was one factor that contributed to last year's poor stock market performance. But Fed officials signaled an important pause in rate hikes at their recent January meeting. Now, markets were expecting the Fed to back off their original plans, but Fed officials went beyond what the market was expecting and clearly articulated that they did not have any plans to raise rates anytime soon. This pause in raising rates provides a more favorable backdrop for markets.
The U.S.-China trade war began last spring and has caused a lot of concerns around global growth. How is that impacting the economy now?
The tariff standoff is holding up a lot of things in the economy: business spending, global trade, and consumer confidence. And resolving the trade conflict would remove many of these restraints and likely lift markets. We do believe the increasing incentives for both countries should lead to at least a framework of a deal in the months ahead. However, until that happens, we do expect more bouts of market volatility.
Thank you for being with us here today, Jason.
Thank you.
And thank you for joining us. To read our full market commentary, please visit our website.